Hello and welcome again. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Thursday, January 28th of 2021. We've got several headlines and markets are moving today. So let's get right to our daily updates. Thanks for watching. So this morning we had the fourth quarter GDP report. It came out at 4%. So the fourth quarter US GDP grew by 4%, just slightly under the 4.3% what Wall Street was expecting and all the economists ultimately sort of factored in for the fourth quarter. That wasn't so bad simply because we had additional restrictions because of the second wave of the coronavirus, if you recall, in the fourth quarter of last year. And if you think about it, let's look at the US GDP. The snapback that we had was 33%, which is the third quarter of last year. That was tremendous. And you can see the long-term trend line is very positive for the US GDP. If you recall, I spent a lot of time talking about the GDP. Okay, Wall Street pays attention to it. We at Blanke Schein Wealth Management obviously spend a lot of time on it, simply because 2/3 of the US economy is measured by just consumption and growth. So it really shows that there's economy that's growing out there. And ultimately, if the trend line is in the right direction, which it is, it's back on track, that then relates to corporate earnings. Corporate earnings move markets. If you follow me, I'll explain that tomorrow as well in terms of how corporate earnings affect and impact the overall market itself. So tune in for Friday Insights tomorrow. That being said, this forecast right here, we're still now back on track of this $1 trillion economy. Now, as I said before, there is $1 trillion in money markets right now. So if we look at, Federal Reserve, Jerome Powell just released information yesterday basically saying that there's still $1 trillion on the sidelines that have yet to work its way into the market or any other market for that matter. That being said, that's where we have an additional sort of wind in our sail on a go-forward basis. Now, couple that with Congress. Probably March, maybe April, we'll have another round once they agree on a stimulus, sort of more targeted to the travel, leisure, and obviously hospitality industry that need it most and those that are unemployed. Now let's talk about the unemployment rate today. The January 23rd report for initial jobless claims came in below what the expectations were. So they were expecting a higher number of claims, which is a good trend for unemployment going in the right direction, but it's still a high number. So it shows stress in the economy. So keep in mind, we have $1 trillion in the sidelines in money markets. Now, banks are printing money right now. Why is that, you ask? Because they make money on our deposits. So when they're not paying us anything, and trust me, banks aren't going to alert you that they're not paying you any interest on the money that's sitting there. In fact, last year, Blanke Schein Wealth Management, we received more money transfers in from clients that have money on the outside of sort of their investment portfolio saying, hey, let's put this to work, even if it's in short-term cash management, to pay our sort of make money, right? Have your money grow and stay ahead of inflation. So if you're one of those at home, you still have some money in the sidelines in a bank, give us a call. It's an easy transfer. We're happy to put it to work for you in some fashion, whether it's right in terms of your investment plan. We'll look at and review your plan, and then we'll allocate the cash appropriately and accordingly. But you don't want to bet against several things, right? You don't want to bet against the Federal Reserve that's going to support this market and ensure that the GDP is back on track. You don't want to bet against Congress adding more dollars again into the U.S. economy. And then the third thing is there $1 trillion out there. So while we have conviction on a go-forward basis in the equity markets, yes, markets are at all-time highs. And as I said earlier this week, we expect markets to pull back a little bit. But those are only viable opportunities for some certain sectors of the S&P 500 and the NASDAQ and so on and so forth, because those are going to be viable opportunities. So we're positioning ourselves, our clients, accordingly to take advantage of quality at a reasonable price. Again, we're looking at corporate earnings as they report right now. Corporations are basically coming in better than expected, and markets are selling off just in anticipation of just taking a breather, okay? But there are, the reports themselves are very indicative of what we should see on a go-forward basis. But those three things you don't want to bet against: fiscal and monetary policy, as well as the money on the sidelines. Again, if you have money at home, let us know. We're happy to help with that as well. But thanks for watching today. Those are the three things we wanted to cover today. $1 trillion in cash on the sidelines. We have jobless claims in the labor markets, a little bit better. The trend is better. However, it's still showing stress in the U.S. economy, as well as the U.S. GDP. So we're back on track, and the trend we will continue to follow for the GDP. And that's why it's really important to keep an eye as we manage money in these economic sort of reports. So thanks for watching. Have a great day and take care.